I'm Doug Massi, and it sounds to me like it might be that time for, well, for you and I to have a little heart-to-heart about selling mortgage protection. And in this video, I'm going to answer two questions. One, is mortgage protection still a viable product to sell in our market today? And two, are multi-level marketing insurance companies like Equis Financial or Symmetry Financial Group the best options for an intelligent, hardworking insurance agent just like you? Well, let's begin by talking a little bit about my experience selling mortgage protection as a top producer and the fact that you haven't given this video a thumbs up yet or even subscribed. Where's the smashy, friend? Back in the day, I was recruited to sell mortgage protection insurance by a friend of mine who worked for The Hartford. Then I became their #1 agent. Then they dropped the lead program and the main product we were selling. Well, eventually they did because of the lack of lead availability. Then I tried everything humanly possible to either buy or generate my own fresh exclusive mortgage protection leads, only to realize that most insurance companies that had these type of leads would lie about their leads and would end up just reselling them over and over and over. Then I got into selling final expense and became a super producer, the end. Trying to break into the mortgage protection industry in this day and time is kind of like walking into a restaurant with the intent of buying a meal that has already been served and is already sitting in front of the other customer. It just doesn't make sense. Well, for most of us, that is. And if you stick around until the end of this video, I'm going to show you how to get a copy of our custom memorial planning guide along with the policy summary that I leave with everybody I sell. The summary is an awesome place to write down the monthly premium and the draft date for the client, and you can put your information on it too. Very professional. Since there just aren't enough new mortgages being sold, there aren't nearly enough leads available. I mean, that's why the Mortgage Protection Insurance Agency are reselling the same leads over and over and over again. Even worse, a lot of companies will actually tell you that they've got more leads than you can ever work. They just might forget to mention how these leads have already been worked by multiple insurance agents. And then you got agent saturation. Haha. All these big multi-level marketing insurance companies are spending tons of money each year recruiting unlicensed agents. There are probably thousands of new insurance agents being recruited and getting licensed every single year. Thousands. One of the pros about working with a company like Equis Financial or Symmetry Financial Group is that they both generate their own leads or have mail houses that they work with, at least. Now, we know that working leads is the easiest and, in my opinion, the best way to get in front of a lot of potential buyers. And both companies, they also have group meetings where they can motivate their sales force and recruit new agents into the business. If you're wanting to build your own insurance agency, then this is a great business model to help you get started, especially with those group meetings. What's the negative aspects about working with these two companies? And in my opinion, it's actually like a two-part deal. First, let's talk about the commission structure. Personally, I believe that we all have to pay our dues, and for most of us, what that means is that we have to learn the business somewhere, from someone. And the commission level shouldn't really make that big of a difference while that learning curve, you know, that new agent having to cut through the basics of the business is happening. Unless that commission level is extremely low. I believe there should be a minimum wage or minimum commission level for anyone in the life insurance business or even the Medicare Advantage sales industry. To me, the minimum wage for insurance agents that are paying for their leads should be right around 100% or higher for most life insurance products. For brand new agents who are selling mortgage protection insurance or final expense, the commissions need to be high enough for a writing agent to actually be able to make a decent living. Over the years, I have seen lots of literature with the Equis or Symmetry name or logo on it, advertising starting commission levels for new insurance agents to be way below 100% first-year commission. While writing this video, I did a little research and found some literature showing both of these companies starting new agents as low as 70% first-year commissions. If someone is holding your hand and has a local office that you're going to for daily training and you're able to get in the car with some of their amazing producers, not average agents, but really good producers, and you've got access to 100% exclusive leads at cost, then in my opinion, that lower commission is pretty much a fair trade-off. There is nothing wrong with giving up commission if you're getting access to good sales training and exclusive leads, which brings up that second negative that I mentioned earlier. There is nothing worse, and this is just my opinion, guys, than getting stuck with an insurance agency that says they have leads, but then later you find out they're only giving you or selling you age leads that, well, because that's the only thing that's available in the areas within driving range for you. Unfortunately, even though these companies have their own leads and may even be generating them on their own, what tends to happen is that they will often recruit a lot of agents in a lot of different areas, and the next thing you know, you only have access to leads that have already been worked by other agents. This isn't so much the issue with final expense sales, but it is a major issue for agents that get into the mortgage protection market, you know, and they think that they're coming in to sell mainly mortgage protection insurance. When you have extreme agent saturation that all want to sell a product with limited lead availability, then the only way for this to work is for you to work leads that other agents have already worked. And if you're a brand spanking new agent, look, there's nothing wrong with working recycled leads. The cost of these leads is usually pretty cheap, so the idea of learning a business while working cheaper leads is actually kind of smart. Once you go from working the recycled leads to working the new leads, things suddenly get a lot easier. But if there aren't enough leads to go around, then, well, think about it. When the Hartford lost their mortgage protection product and lead program, I tried everything to generate leads on my own. I tried to buy them from different lead vendors, and the viability, the availability was just not there. I was so desperate that even I was already like kind of anti-multi-level marketing. I contacted one of those companies to see if they could generate leads in my local areas, which were actually a population of over like 8 million people, and was told, heck yeah, man, we got more leads than you'll ever be able to work. So I took a brutally low 55% first year commission for that was the higher commission for some of the better products. And after a few months, I had only received one exclusive lead and hundreds of recycled leads. So, you know, of course, since they misinformed me about the leads situation, I wanted out. They did not release me. They wouldn't release me. That was like, they gave me 15 different excuses, and they were like, we just don't do that. I had to wait out 6 months before I could move the contracts over with some of the carriers. And let me tell you guys, this really messed me up. And it messed me up because I was already a proven producer who had paid his dues. The only reason I moved all my contracts over to these scumbags and settled for a big drop of commission was because I was lied to and manipulated. And FYI, the company that lied to me was not Equis, it wasn't Symmetry either. I have never contracted or worked with either of these companies. So with all that said and done, no, mortgage protection insurance is not a viable product to sell unless you are, and in many cases, willing to travel out of state and or risk being manipulated or lied to. Also, there is nothing wrong with working with companies like Equis or Symmetry because, one, you have to start somewhere, guys, and two, for the right person, that rare individual, the business models that these companies have can actually work pretty well. There are a lot of insurance agencies just like mine where we concentrate on growing the agent into a superstar and don't recommend recruiting until you are an absolute pro. Our first year commissions start right around 110% for agents who are new or don't have a lot of production and actually have a couple $1,000s to finance their own leads. We do not target mortgage protection sales, sorry, but we do generate exclusive final expense leads and Medicare Advantage leads for all of our agents. The one thing I absolutely love about selling final expense and Medicare Advantage is the availability of exclusive leads. I do not believe in recycled leads, as a lot of you realize, and selling them to other agents. So we don't do that. For a copy of the policy summary and the memorial planning guide I mentioned earlier, just email me at doug@ufesonline.com. For more information on joining us as a completely independent insurance agent selling final expense and or Medicare Advantage or even Medicare supplements, just shoot me an email at that same address. Remember, when you put the needs of your clients first, everything else will usually fall right into place. So get out there, guys, and do something good for someone today. Happy hunting. Well, there aren't nearly enough leads available, and that's, to me, the minimum wage for insurance agents that are paying for leads should be around 100% for, the most, The one thing I love about selling final expense and Medicare Advantage is the availability,